I'm repeating once again, students. Please remember, we are solving problems on NI approach. So the NI approach asks you to calculate the total value of the firm. So to calculate the total value of the firm, they would have given you the EBIT, the amount of debentures, and the cost of equity. They would have given you only these three things. So now how do you calculate the total value of the firm using NI approach? So to calculate the total value of the firm according to the NI approach, the process I'm telling you now, please listen carefully. So the formula to calculate the market value of the firm is nothing but the total value of the firm is V equal to S plus D. So what is V? Wherein, please write down, wherein V is equal to total market value of the firm, S is equal to market value of equity shares, and D is equal to market value of debt. So to calculate the value of the firm under NI approach, the formula is V is equal to S plus D, wherein V is equal to total market value of the firm, S is equal to market value of the equity shares, and D is going to be the market value of the debt. The market value of the debt would be given in the problem. If you look into here, the market value of the debenture is given, but the market value of the equity shares would not have been given. If that is the case, you are going to calculate the S, that is market value of equity shares, by using a formula called as earnings available to equity shareholders divided by equity capitalization rate. Am I clear?
Yes, ma'am.
I repeat again. How do you calculate the total value of the firm using NI approach? First is the formula. The formula is V equal to S plus D. V is nothing but your total value of the firm. S is going to be the market value of equity shares. And D is going to be the market value of your debenture. If they give you in the problem directly the market value of equity shares and market value of debt, you can directly substitute S and D and calculate the value of the firm. In this problem, if you look into, the market value of debt is already given. The market value of debt is how much? 4 lakhs. Okay, 10% debentures of 4 lakhs. But our EBIT is, our market value of equity shares is not given. Whereas they have given us EBIT and they have given us the capitalization rate. So that means you need to work out what is going to be the market value of equity shares. So in this question, what did you understand? You knew the formula now. What is the formula to calculate the total value of the firm under NI? V equal to S plus D. So S is going to be the market value of equity shares. S is shares, D is debentures, market value of debentures. In the given problem, the market value of debentures is already given, whereas the market value of shares are not given. So how do you calculate the market value of shares? Earnings available to equity shareholders divided by the capitalization rate. So we have the EBIT. EBIT is earnings before interest and tax, meaning to say this is an amount which is not paid to the debenture holders. That means interest is still pending here. Am I able to make it clear?
Yes, ma'am.
All right. So we are going to calculate the amount available to the equity shareholders. This is EBIT. It means that interest is not yet paid. Right. So EBIT, how do you calculate the amount available to equity shareholders? calculation of amount available to equity shareholders. How do I calculate EBIT? EBIT is how much given in the problem? 1 lakh. Minus interest. How much is your interest? Less interest. How much is interest? How do you calculate interest now?
40,000.
Interest is paid on what? Interest is paid on debentures. The rate of interest is here 10%. 10% of 4 lakh. So 10% of 4 lakh is how much? 4 lakh into 10%. How much we have? Answer.
40,000.
40,000.
It is 40,000 is the interest. So this becomes your what? EBIT minus I. Interest will give you EBT. So EBT is how much? 1 lakh minus 40,000 is how much? How much? Yes. How much is your EBT?
60,000.
Yes, please reply. So your EBT is 60,000 now. From EBT, we need to minus tax. Do we have tax here? Do we have tax?
No, ma'am.
We don't have tax. So we are not going to minus the tax because they have not given us tax here. So EBT minus your tax would give you amount available to your or earnings available to your equity shareholders. Is how much? 60,000. We have calculated the amount available to the equity shareholders. Equity capitalization rate is already given in the problem. So you can calculate the market value of the share. So therefore, market value of equity share is equal to, what is the amount available to equity shareholders? Amount available to equity shareholders divided by equity capitalization rate. So your amount available to equity shareholders, just now you calculated 60,000 divided by equity capitalization rate is how much? 12.5%. So what is your answer?
7,500.
How much?
7,500.
Ma'am, it's 4,80,000.
How did you get 7,500?
Oh, I'm sorry, ma'am. Sorry. Like
4,80,000 is your market value of equity shares. So it's going to be 60,000 divided by 12.5 into 100. So it comes to 4,80,000. To calculate the total value of the firm, you require S, that is market value of equity share, and you require D, market value of debentures. So what is your market value of debenture? Market value of debentures is given in the problem. The market value of the debenture is how much?
4 lakh.
It is 4 lakh. So your value of the firm is equal to how much? 4,80,000 minus 4 lakh. Am I making sense?
Ma'am, it's 4,80,000 plus 4 lakh.
I'm sorry. Plus 4 lakh is equal to 8 lakh.
8,80,000.
So the value of the firm is denoted by what? V is equal to 8,80,000. Have you understood? Yes or no?
Yes, ma'am.
Shall we move on to the next question? But we don't have time. A quick look at the second question. A company expects a net income of rupees 1 lakh. It has rupees 2,50,000, 8% debentures. The equity capitalization rate of the company is 10%. Calculate the value of the firm. Calculate the value of the firm and overall capitalization rate according to the net income approach. So in this problem, you are supposed to calculate two important things. You need to calculate the value of the firm, as well as you need to calculate the overall capitalization rate according to the net income approach. So what does overall capitalization rate say? The capitalization rate should come down and the value of the firm should increase. So this is what we are going to find out. And this we will go through in the next class.